Today, let's dive into Q2 earnings, and of course, that is Tesla. We've had a little bit of time to digest this a little deeper than I think a lot of people have jumped into. I'm going to bring that to you. My name is Paul Barron. Welcome back to Tech Path. As we jump into Tesla today, the whole idea around the Q2 earnings was a couple of things. One, of course, was that Elon was very frustrated with this whole idea around the chip shortage. And I think that has also showed up in the basically the performance, even though they've absolutely blew past Wall Street's expectations, both on where they're going on a profitability, but also in the automotive aspect. And I'm going to break to those charts in a minute of where their sales and performance was. But he did mention kind of this whole idea around the agony of manufacturing, which, as he said, seeds of defeat are sown and on the day of victory. So they've done a lot here in Q2, but the idea is that there's a lot of challenges ahead of them in terms of this whole situation on manufacturing and, of course, the chip shortage itself. Great progress, though, they said, on the 4680, but complained about the 36 flavors of battery options, which, of course, is slowing down potential production. So there's a lot of different variances that are coming from all the major manufacturers out there. He did confirm that new supply chains would have to be created in kind of these new manufacturing areas, much like Berlin. So that's, I think that is known, but I don't know that a lot of people understood just how important that was, because they're not just creating one supply chain for Fremont and Austin. These are supply chains that they're working with either local suppliers and or implementing a whole new supply chain architecture to just be able to seed and feed that factory. So that's a big deal. They did perform better in terms of their sales and administration costs, which I think is just scalability. This was a big one. Tesla charging network is going to show that it's not necessarily a walled garden. We've talked about this before on the show, and if you haven't checked out that video, you should maybe check that out. We had it with Lars over there at Best in Tesla, where we talked about the charging network and what it meant to the rest of the EV universe to essentially open up what is the biggest and best charging network in the world. And I think that's going to really create not only a potential opportunity for Tesla, but we've also seen some analysis where this becomes a big profit center for them as well. This was one of the downers, and that was Cybertruck. Cybertruck is not going to happen in 2021. And at the case right now, based on what we're seeing and what they talked about with Model Y and the development of 4680 and utilizing that, battery pack or that, structural battery pack at the Austin facility, which is where Cybertruck will be made, the likelihood is that Cybertruck probably won't show up until late 2022 unless Elon's got some interesting things up his sleeve. They do and know that they must grow the network in terms of the charging network, though, back to that point, much faster than their sales network, because their sales network right now is essentially maxed out. When you look at what the potential is right now, a Model Y is delivering in November. Here we are filming this in late July. That's one of the I think it is the longest time frame in which Model Ys have been delivered. So the likelihood is Tesla is technically sold out till the end of the year. So that is huge in the sense that what could they have done if the chips were in the supply chain? What could they have done if the scenario of Austin or even Giga Berlin were even close to open? And we're going to talk about Giga Berlin and Austin in a minute. I'm going to show you some photos of this because it's interesting of how this is going to come. Here's the thing, what they're looking at is chips for power walls and cars are both the same use case, so they have to kind of sacrifice power walls, but they are hoping to hit 1 million power walls next year. This was part of the earnings call. They do have a ton of Megapack sales, which is a great indicator of really what performance is happening in the energy business. They did beat on revenue, which was 28.4% of auto gross margin, big time. The one that is very interesting, and I'll show you this in the chart, is their share per earnings, which was absolutely off the chart. $10.2 billion in auto revenue, and then an estimated, right now, the way we run the numbers, this could be a $6 share price in 2021 in terms of earnings, and a potential of $12 in 2022, which is why I think that we could see Tesla really blast through potential stock price, barriers that they've had around the $800 mark, maybe later this year and definitely into 2022. The issue that they have is the loss of the X and S, which hopefully this is going to really improve in Q3 and 4. I feel like this is probably going to be a Q4 thing that really starts to show up, but they can't get the chip supply in, so that still creates that whole situation. It's like, do you trade off Model X or Model Y because the Model Y is going to sell in greater numbers? There's a lot happening, I think, that they're having to do in terms of really shuffling the deck to make sure they can meet not only demand, but also some of the expectations in terms of the performance. They did move the Semi to 2022. That was kind of expected. The stock in the past, though, post-earnings, stock trades sideways over the past year. This is something that I think we'll continue to see. In other words, even though they had tremendous sales performance here and tremendous earnings per share, it's still trading sideways, and we got that little bit of run up, but I think this is going to really be kind of the case all the way into Q3. The options volatility have plummeted, and the options market is pretty much dried up on Tesla. So that is really showing the fact that we will probably not see a lot of price action here. The concern I have is really the energy products. They're very slow to develop, and I'm still concerned about the slow production on Cybertruck. There's no guarantee that they can win this game. And even Elon mentioned this, that Cybertruck is really kind of a new platform altogether, and its opportunity of being able to make it out is, I won't say it's still questionable, but it's definitely not just a slam dunk. They are going to get it, of course, but the question is when and how long will they be able to do this. This will take a huge move for Q3. The big thing, I think, in terms of pricing where they are right now, Q3 is going to look good. The key here will be X and S and their re-entry into the fleet in terms of being able to sell them, because right now the X and S is still way out in terms of deliverability, which I think is still not going to affect the selling price, even with X and S, maybe until Q1 of 2022. So where does this go? This is kind of the picture I want to look at, and that is revenue over the next year to 18 months. Tesla, I believe, could double in revenue in 12 months. Key here, of course, is always going to be the chip supply, which if they've been able to solve, they have the ability to be able to handle the battery supply issue. Auto revenue could, though, double with Berlin and Austin to $20 billion, and that is just insane when you look at these quarterly numbers. Could be get a better GAAP gross margin, which I think will go up to around 27%. All of that's going to play in, and the efficiency could really ramp up the scale and operating efficiency with these new manufacturing facilities, which is going to make it easier and cheaper to manufacture, which means their margin on gross is going to be even better. This means when you look at based on the year over year, we could see auto revenue at $20 billion for Q2 2022, based on the scale of operations that they're looking at moving to with both Austin and Giga Berlin. So I'm looking at year over year. If you think about this, what's Q2 going to look like next year? Where will our stock price? Look at where we are right now and what the potential is here for a double. Chip shortage, though, has got to resolve. And I want to jump to Tesla's earnings call sheet and basically just kind of run down the numbers here and kind of what I saw. And let me just kind of jump up here a couple of slide for you. Here it kind of just validates what I was talking about in terms of that first line. You see automotive revenues at $10.2 billion, up from $9 billion in the previous quarter. Look at this right here, the total GAAP gross margin. This is the thing that I thought was very showing and telling, because they've had 2 straight quarters of improving GAAP margin, which is 24.1%, up from 21.3% and up from 19.2% in Q4. So tremendous performance here. Look at this 11% operating margin continuing to climb. But this guy right here is the one I'm very proud of as a Tesla stockholder, and that is earnings per share. This is non-GAAP at $1.45, up from 93 cents. Wall Street expected this to hit somewhere between the 95 and dollar range, and basically Elon and Core absolutely blasted through that and literally just unhitched the Tesla powerhouse and performed like nothing. I think that a lot of people were. This was the one number that really kind of moved me in terms of where potentially Tesla could go in the future. Right now, Tesla is, I think, underpriced. And I'm an investor in it. I've bought in the 500s. I own in the 400s. And I'm seeing action in this mid 600 range that I'm feeling pretty good about, because I think this has the potential, based on what they're showing us in Q2, their abilities, and with the hurdles they have to overcome, this is going to be fantastic for them. Here's the one concern I have that I thought was interesting, and this was vehicle capacity, their slide deck on this. Let me zoom up on that if I can. There we go, a little bit there. California, of course, Fremont, right there. Model S and Model X, current production, very, you can kind of see the scenario, not as good as I anticipated. Cybertruck and Tesla, I kind of thought that might be in production. It's still showing in development. This is why I feel like Cybertruck, we already know Semi is out there on TBD in terms of where they're going to produce this, but the capacity here for Cybertruck still being in developed. And Elon kind of mentioned this. So sometimes he plays a card and shows his hands on where he's thinking. I feel like either he's sandbagging on Cybertruck, or there's a real, I won't say issue with it, but there's a real challenge that they've got to overcome and be able to move in that direction. Just to give you guys some pictures of Giga Berlin and Giga Austin, I want to show you Giga Berlin right here. This is fantastic in terms of their, just their progress on what they've been able to get done. You can kind of see the Gigafactory paint shop. It's moving and in place. There's the factory in Texas on both 6 months ago and then where they are now at present day. These are pretty impressive moves on, when you think about the scale of these manufacturing facilities and what they mean. We are just now, end of Q2, moving into Q3. I feel like the ramp up period is going to happen in 2021 for sure, and that's going to probably be in Q4. With that, again, back to my point, chips, big factor. If these factories do open up and really start ramp in 2021 in Q4, that's where I think we start to see the kind of performance into Q1, meaning the Q4 numbers at the end of the year will really start to show the tail. I feel like we're going to see a pretty significant move here on Tesla's stock, and moving in the direction that could be pretty fantastic if I'm just thinking of how much investment you could do with Tesla right now and kind of moving into this direction. Remember, these are market movers. We put these together, we pull together research like this, analysis of these investor calls. We put together some, hopefully some data and some science behind this that pulls in at least an idea for you to take a look at something and go a little bit deeper. If you're not an investor in Tesla, I am, but it's not investment advice, but this is a company that you should be checking out. If you're looking at the S&P 500, I think this is a high flyer that definitely is going to continue to perform in a big way. This is another, I'm gonna just go back to these photos. I wanna scan through these real quick with you guys. Texas, this is the stamping press. Look at the size of this beast. This is for the Model Y. And then you've got the body shop right there in the Model Y. They've already got cars staged up in here. This is getting close, people. And then you can kind of see the team right there standing on the roof. And of course, the scale right there on Shanghai. Look at that. So their expansion is continuing in Shanghai to, again, address both the Chinese market and kind of the growth of where Tesla is going overall. Overall, I would score this as, first of all, it was an excellent performance by Tesla in Q2. I think it was a little bit of a letdown because I don't think that Wall Street understands where this company is going. They have not been able to put the dots together and create the roadmap in their own mind of how this goes out there. So I know Gordon Johnson is probably rolling over right now because of these kind of performance, especially on the earnings per share, and then also just on the performance overall of Q2. And the likelihood is that they are not slowing down based on battery limitations, which they clearly identified, even though they did roll that back, because Zach talked a little bit about that, their chief financial officer, about that going from double what they have access to this year. So if you just think about the numbers, we're probably going to see the 800 to 900,000 cars made this year. So imagine if that could get to the 2 million mark in 2022, along with this kind of scalability on the manufacturing. This is going to be an absolute crazy 18-month run for Tesla. I'm glad we're in early, and I think if you are in there, you're in luck. This is a good time for Tesla and one that you guys should be watching very closely. All right, you're listening in over on the podcast. best thing to do over there is give us some kudos, give us some stars if you like what you're hearing or seeing. And if you're over at you're in your Tesla, you're cruising around that new Model X with that funky, wheel, which I'd love to know your comments on that. I've heard different people. We watched MKBHD and his review of it in the Model S and the whole new concept wheel that they've put in. I don't know if I would really like it. More so, not necessarily the wheel, but all the interaction functions within it versus the stock. So you've got blinkers, horn even, which I thought was very interesting. Anyway, I'm getting off subject, but the point is, leave the comments below. Tell us what you do like about Tesla, where you think it's going, and maybe a topic that you really want us to explore here on TechPath. Hit it in the comments, and of course, subscribe to the channel if you want to hit me up. It's on, on Twitter, of course, @Paul Barron. We'll catch you next time right here on TechPath.